Mike, very few CEOs see their stock pop after reporting a $500 million loss, but this indicates that investors believe that you're turning a corner. The question I have for you is, if you're turning a corner, where do you put yourself in the industry now? Are you going to start throwing your hat in the ring when it comes to potential beaten down acquisitions, when it comes to deploying capital in a bigger way again?
Yeah, listen, we reported we have over $1 billion of cash. I think that's part of the reason the market likes our stock today. We also, listen, over the last 18 months, we've made over $1 billion. And so while our balance sheet got marked down during the up-down ride, we managed to sell a bunch of assets at good prices. Our operating businesses are doing well. And yeah, we're looking at everything. I'm not in a rush to buy something. I buy something that's going to be an add-on or something strategic. I don't think, somebody waved a magic wand and everything is healed, both in the crypto markets or, quite frankly, in the traditional markets. Right? There was a tremendous amount of damage done in confidence and to balance sheets. I think the worst was over. Right? We put in a fear-based bottom, but rarely do you see V recoveries. And so I think that we're kind of in this for the long haul. And I'm looking at strategic things with a 3 to 4 year horizon, not a 3 to 4 month horizon.
Yeah, speaking of the 3 to 4 month horizon, I rarely ask you for price targets for the year when it comes to Bitcoin and Ethereum. But given we're seeing a merge, given that you have told investors here that we need new energy in this system, where do you think the industry goes this year, given that you still see some choppiness ahead?
Listen, I think the Ethereum merge is a really big story, right? It has been. I mean, when I first bought Ethereum, way back in 2015, they were talking about this move from proof of work to proof of stake, and it's finally here, and that gives energy to the space. It's going to reduce the supply of Ethereum that's sold every day dramatically. It's going to reduce the inflation rate, and so I think Ethereum has a real story, and Bitcoin's story is very much tied to the Fed, and we're still in a really complicated scenario. The last few data releases have started saying, well, geez, maybe that crazy idea of a soft landing is possible. I'm still really skeptical of the soft landing, but the market's telling you they're believing in it. And so assets are going up. I think the Fed's going to be able to stop raising rates. Wednesday's a big deal. Yeah. Wednesday's number. If it's a horrific print, you're going to see another sell-off in fixed income and probably sell-off in risk assets. But I think, listen, what you saw with BlackRock, putting Aladdin into play with crypto, yeah, that's actually unbelievably important for our space.
Mike,
that's saying.
But I know it's like, perhaps, dare I say, in your benefit to say institutional money is coming and it's coming to remain. But can you give us any anecdotal evidence, other than, of course, the BlackRock deal with Coinbase? How much are we seeing institutional flows getting more confident coming in? Or is the pop that we've seen that's seen Ether almost double, is that more a retail play at the moment?
I think there was certainly people that had gotten short, hedge funds that had gotten short, and there was short covering that helped drive that. There's some retail coming in, but we are seeing institutions, we travel a ton and meet with people. They never kind of backed off their interest. And so we're not seeing huge institutional flows, to be fair, but we're not seeing anyone back away. And so the kind of put is there that's giving businesses the confidence to keep hiring. Right. I looked at my business really hard, and my first instinct was we've got to cut a lot. Yeah. And when we pushed and kind of relitigated every single one of our business lines, we ended up cutting very little, and we're actually going to, end the year with probably 25-30% more employees than we started the year with.
Can I talk a little bit more about your business, Mike? It's interesting. Mark Palmer over at BTIG puts out a note saying that the relative outperformance of you compared to the peers is due to the company's risk management. I'm curious how any new sort of risk management policies you put in place after Terra, Luna, 3 Arrows. What changes have you made?
Well, listen, we've always had a pretty practical risk management approach. I came from that business. Chris Farrar, our president, ran a credit business. And so in credit, we've got concentration limits on any one name. We always are collateralized in the crypto space. And so we're often very well over collateralized. In the markets businesses, we trade with stop losses where appropriate. Same thing, concentration limits. We've got a really active derivative business, and we use that for hedging. We were able to convince a lot of our mining customers to do structured notes around their loans. And so a lot of our miners didn't have any real issues because they got taken out of their position on the down move. And so it's a combination of, I think, kind of practices that we all learned at places like Goldman Sachs and Fortress and JP Morgan that we migrated into the crypto space.
Mike, it looks like there's some belt tightening in risk management across the industry, and you're doing some belt tightening as you filed a claim against Three Arrows Capital. When you're looking at these firms who are looking to make their investors whole again, what do you expect? What do you expect back when you face a situation like this?
Oh, very, very little in some of these situations. Listen, we've had one credit loss in the history of our company, and I disclosed the name today. It's a manageable loss relative to our balance sheet, relative to our credit business. Our credit business actually was profitable on the quarter. I feel pretty good about that. What we saw away from us was huge concentration in this one name, which created a lot of the systemic risk that we saw and the cascading of Bitcoin all the way to 18,000. I don't have a crystal ball. When I add up the total claims that people filed, it doesn't feel like there'll be a lot that comes back in that case. You've got Celsius, you've got Voyager, you've got lots of other places where both institutions and retail lost a lot of money.
Right.
And there'll be a business for that where people are bidding on.
I want to double down on retail because you brought it up. You mentioned earlier that you're skeptical of a soft landing. And to the extent that means there's a recession coming, that it'll be a hard landing, how much money will there really be on the sidelines to put into crypto, let alone any risk asset?
Listen, the Fed increased money supply at a rate that we'd never seen before, and they're slowly withdrawing that. There's still a ton of money in the system, right? There was excess savings in retail. That's getting worn down some, but there's monster cash holdings. People got really nervous. I mean, we had a pretty dramatic sell-off in the first half of the year. And so I don't think we're going to see what we saw last year when money's flowing in and it's all booming, but I don't think it's Armageddon here yet either. And so again, will Bitcoin get through 30,000 on this move up? We'll see. I'm doubtful. I think we're going to probably be in this range now. I'd quite frankly be happy if we're in a 22,000 or 20,000, 30,000 range for a while with the next move breaking up. Ethereum's got a little bit more juice. It's at the top of its range. It can, takes out 2,200. It could go higher. That's got a real story. But I don't see, the mania that we saw in 2021 or 2017 reigniting. Listen, I hope I'm wrong.